Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hope y'all had a great weekend. It's Chuck, Mike, and it's Tucker with you here. And we'll kick things off with a little bit of a discussion about the stock market. We've talked about it a couple times before, but it's a place that people can put money into companies that are publicly traded, and the value of them goes up or down on a daily basis. It's a pretty cool thing. It's a pretty wild thing. And specifically this year, if we continue with the pace that we've been on for the first 7 57/100ths months of the year that we've been on, here's what we're going to have. It'll be a fourth consecutive year of double-digit gains. Not just 4 years of gains in a row for the stock market, but 4 consecutive years of double-digit gains. It's only happened 3 times since 1928.
It's pretty rare.
The last time that we saw it actually was the only time that we ever saw 5 consecutive double-digit years, and that was 1995 through 1999, which is the only string of 5 consecutive years in the last 98 years of the S&P 500. In fact, in that one, it wasn't just double digits. It was 5 straight years of 20% or more. Now, subsequent to that, the S&P 500, and more specifically the NASDAQ, went through a serious bear market, with the NASDAQ not recouping its losses for, I think it was like a decade almost.
The NASDAQ? No, I think it was more than a decade.
It was 12 years, I think?
I believe so, yeah.
The S&P got back there in like 5 or 6 just before the financial crisis blew things up again.
Yeah, I was going to say, not only was it a terrible .com crash, but you had one of the worst decades in stock market performance in history.
Yes.
From 2000 to 2009.
Yes. Now, I will go on record, actually, and say if you want to be serious about the causes of the .com crash, I'll actually go so far to say it wasn't what was going on in the .com sector. But I digress.
You're not going to digress. Let's go there.
I'm going to go there.
Yeah. Regress.
I will regress.
Digress.
I will just...
Ingress?
I'm... We're doing a little too much gressing right now, and we need to just progress if we can.
Yeah.
I will make the case that what actually killed the late 1990s economy was the fact that we ran a government surplus. Now, I know that people's heads are going to explode when I say that, but the reason why is that ultimately, I'm a big believer in one of the main things that's made it really hard to have a recession right now is the fact that you're running huge government deficits. I'm not saying that they're good or bad. In fact, I think they're bad at the level that we're at, but it can still provide a stimulative effect to the U.S. economy because you're pumping a whole bunch of money into it through borrowing.
Yeah, to be clear, we're running approximately 6% of GDP deficits right now. We have been throughout the Biden administration, now throughout Trump too, and no real signs of slowing down in any meaningful way.
Yes. So I think that when you look at this, what really matters, in my opinion, is not specifically what the deficit is in any particular year, but rather what the change is from the year before. And what you saw was ultimately a case where you had rapidly shrinking annual deficits in the late 1990s. Case in point, in 1995, there was, I just want to make sure that I have this. Yes, here we go. What we have, okay, so this is what we saw in the 90s. You had, in 1995, the annual deficit was $164 billion. 96, it was $107 billion. 97, it was only 22. And then we had surpluses for 4 years, 98 through 2001, with those surpluses growing every year, 98 through 2000.
So I know we all like to compare this to like a household budget, which is a useful exercise for understanding things. But what that, because, pretty nice in a household budget when you are taking in more income than you are pushing out in expenses. But when you talk about that at the government level, what you're talking about, in fact, is the government taxing its people to a higher degree than it is spending money.
Correct. It's literally pulling money out of the economy then. The government is taxing you to the extent that it doesn't know what to do with the money.
Mm-hmm. And that happened last time in the late 90s.
Correct. Now, there's a happy medium where you are able to run small to moderate government deficits that are even smaller than overall GDP growth. And so even if the deficit goes up, it still becomes easier to cover the cost of that deficit going forward. But what we had in the late 90s was a case where deficits went from 4.5% of GDP in the early 90s to negative 2.3 in the late 90s. And so all of a sudden you've got 6% spending relative to GDP that just gets sucked out of the economy and promptly ends up assisting with the death of the tech bubble. It's not to say that it wouldn't have died on its own at some point anyways, but it was very much exacerbated by that, and in my opinion, it contributed to it. So what I am saying, and again, I know this is a huge digression from the actual piece here that we were discussing, but if we are going to be serious about reducing the annual deficit that we have, we do have to be cognizant of the fact that it may cause and is likely to cause a slowdown in the economy in the short term when we do so.
Well, good news, Chuck.
We're not going to change that.
I see zero indication that any elected official is being serious about government deficits and how much we are spending versus taxing.
No, we're talking about more tax cuts and more government spending right now. We've got the defense budget being increased by 50% and tax cuts being floated as well. Mm-hmm. So fear not, Americans.
So instead, we're going to socialize AI. Got it.
This all sounds...
That'll be the stack later. Don't worry. Yeah, we'll get there.
Well, honestly, this is just kind of like...
Hey, should we fix our deficits or Social Security problems? No. But we want to own every AI company. Government does.
Doesn't this just feel like...
What?
Sounds good to me, man. I don't know.
I'm just... I don't know. This is a tough one. But in any case...
What you are alluding to without saying, Chuck, so I will say it, is it seems like it might be tough to get a really bad recession when your government is spending hand over fist at paces that we have only really seen over the last 6 years and during wartime. And so, without saying it out loud, that's what you're alluding to, and I will say it out loud, that, just looking at the big picture here, it's not impossible to get a market crash. We've seen market crashes during big spending periods, but it is kind of tough to see a recession happen when the government is spending so much ludicrous amounts of money.
Well, there's two things happening that make it hard. The government spending is one. The other piece is when you have AI CapEx ramping up as fast as it is, that's another huge spending impulse, because what matters is the change in spending from before. And so when you've got, AI spending going from, again, 3 years ago, CapEx from the big hyperscalers was like $500 billion a year. It was like $170 billion a year. And now you're going to $1 trillion plus next year?
Yeah.
Well, that's a huge spending impulse. So who cares if people aren't buying tacos the same way they were before? It doesn't matter when you've got this other huge spending impulse going on. So you get this piece.
Which further makes the case that the spending from the, bottom half of Americans is just irrelevant to the economy today, which is sad, but important to acknowledge.
So we get to this piece where we have, the question, hey, the markets have been on a roll. Is it time to hedge your bets? That's what the New York Times asks. We're going to take a quick break, and when we come back, we'll answer that question.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network. A nursing home stay can cost more than $14,000 a month. Before you assume you have to spend everything to qualify for Medicaid, get the facts. Call 866-848-5699 for your free copy of Cushing & Dolan's new guide, Last Minute Medicaid Eligibility. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Who wants to play golf to support the Disabled American Veterans Department of Massachusetts? I know you do.
Let's do it for the DAV.
Mark your calendars. Monday, August 31st, Granite Links, Quincy, Massachusetts. A full day of golf and entertainment, and all to raise money for the Disabled American Veterans Department of Massachusetts. Let's go. DAVMA.org/event.
Let's do it for
DAVMA.org/event.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The 2026 DAV 5K Boston is set for Saturday, November 7th at Fort Independence at Castle Island. The race is on pace to sell out by the end of this month, so if you'd like to participate, now's the time to register. Head to dav5k.boston for all the information on how you can take part, and if you can't, please consider making a donation. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
All right, so the New York Times. The headline that we're discussing is the markets have been on a roll. Is it time to hedge your bets? And the problem is that this raises, not begs, an awful lot of questions. The first question is, well, what are your bets? Because if your bets are not crazy, then no, it's probably not time to hedge your bets because you've invested for the long run and, well, you understand that stocks can go up or down and you don't know if they're going to go up or down tomorrow, and so you build a reliable asset allocation, a diversified portfolio that allows you the comfort of riding through that up and down while still generally seeing the long-term upward drift because companies in the U.S. have tended over the last 90 years to make more money in the future than they did today.
I feel as though the New York Times assumes that you invest in a way that I've seen like 3 people in my career invest.
What, like a bunch of like tech traders in Korea trying to like pile into leveraged like semiconductor ETFs?
Yeah. Like, not your average trading experience so far as I'm aware. Vast majority of people listening right now, I mean, please text me if I'm wrong. But to the vast majority of people listening right now.
Or you get all kinds of weird portfolios
my
showing
guess is that you have a bulk of your funds in a retirement plan through your employer, the bulk of which is in a target date retirement fund. That's how like most Americans have themselves set up at the moment. And I'm sure that there are people with different iterations of that. And it's not to say you might not have a crypto portfolio or a few individual stocks on the side, but for the vast majority of Americans, the bulk of their investable wealth is in a retirement plan through their employer, of which the options are limited, and most people get defaulted into a target date plan.
617-362-1385. If you have something different than that in your personal investments, specifically if you've got something wild, like, you're betting on like ferret futures or something like that.
Do they have those?
Maybe minks, I bet, for like the coats. They probably have. I would imagine there's mink futures somewhere.
Could be.
In any case.
But that's. And if you invest, like I just mentioned, with the bulk of your wealth through something like that, then the entire idea of hedge your bets is kind of preposterous because you might not even know how to do so in the first place.
Yeah, look, here's the deal. We talked about this last week a little bit. The market is not rigged in the sense that most people think it is. Like, if you consider, like, playing basketball against LeBron James. LeBron Jordan, that'd be a heck of a basketball player. If you played basketball against LeBron James, you wouldn't be like, oh, this is rigged. You'd be like, oh, no, he's 6'8". He's been training his entire career. He's got like 8 nutritionists on staff. Yes, I'm going to get smoked. Mm-hmm. Likewise, when you go into financial markets and you've got Stanley Druckenmiller sitting across the table from you or Paul Tudor Jones sitting across the table from you, you don't get to say, this is rigged. No, they've been doing this for 40 or 50 years. They have, a trained staff that is specifically designed to make money against unwitting market participants, and you're going to get smoked. So for most people, the answer is no. Like, don't try to trade markets because you're generally going to lose in the long run, even if you have, some short-term success. So I think in answering this question, look, the idea behind using financial markets to invest, not to trade, because they're fundamentally different things. If you're a trader, maybe it's time to hedge your bets. But if you are an investor, the premise of it is that you want to own companies that are going to make more money 10 years from now than they do today. And through owning those companies, through the thick and thin, you are going to participate in the growth in the value of those companies because their earnings a decade from now are higher than their earnings today.
Yeah. That having been said, if you're making a bunch of concentrated bets, you should be aware that sometimes when markets crash, those concentrated bets either never return to their previous highs or take an extraordinarily long time to do so, even if they're diversified. The NASDAQ, we talked about this in the last segment, but peaked March 10th of 2000, plunged 78%, did not make its money back until 2015.
So 15 years, not 12.
A long time.
Yeah.
The financial sector. You were loaded up on, bank stocks prior to the Great Recession. You peaked in 2007. You made your money back right before the COVID crisis hit the beginning of 2020. And then after that, it crashed again, and you took a little bit longer. You had to get back to like 2021. So even in that case, a good 12 years, if all of your money was in financial stocks because you were all in on the American mortgage bet. That's the type of stuff that, those are the types of things where if you're doing that, you need to have a plan in place for how you hedge those, how you exit them, how you do all those things. But again, I don't think that's the way the majority of people invest.
No, but let me raise this as a question then in the context of the broader market. The S&P 500 today, as it sits right now, is 39% in technology stocks.
Yep.
You can very much make a case that the S&P 500 is a more concentrated bet on one sector and one technology than it's ever been. And so it does raise an interesting question in that, hey, for investors who previously looked at the S&P 500 as appropriate diversification, now that, and again, just specifically like, I'm just looking at, companies that really have a focus on AI, not just tech, because like Apple's not AI.
So you're not using the S&P sectors to come up with a number here. We're just talking about AI-focused companies.
AI. I've got NVIDIA. I've got Microsoft. I've got Amazon. I've got Alphabet. I've got Broadcom. I've got Alphabet's other share class. I've got Meta. I've got Micron. I've got... I don't think I'd lump Tesla in there, would you? Tesla's a whole separate Elon premium. I'm going to put that somewhere else. I've got AMD. I've got Intel. I've got... I think that's good for now. I think that's good just for what I'm doing. That is 31% of the S&P 500 that is tied up in the AI trade, just out of the top 25 companies. There's probably another like 5 to 7% overall. So like a third to 40% of the S&P is specifically AI and its success. I'm not really sure what you do in that context because it's a problem that investors haven't had to deal with previously. Like even if you go back to like the financial crisis and like the bubble that was building there, financial stocks never got above like, I think we peaked at like 17 or 18%, maybe like 20.
That said, I do have to wonder how many tech stocks back, or what portion of the S&P 500 back in 1999 had some sort of similar level of exposure to the internet bubble. I sense that the moment right now is unique, but I have a tough time saying, this is very different from 99.
Hold, please. I can get you 2002, which is not useful. No. Yeah, financials peaked at like 20%, and that was as the tech bubble was bursting. They were only like 12 during the financial crisis.
Yeah.
What was the big one then?
It does.
Oh, communication services because of all the stuff that get... Yeah, you forget about telecoms and how big they were back in the day.
It does seem as though there is a hyper-focus and hyper-concentration on AI, the likes of which we haven't seen during other market cycles. But, as to what that will do if and when it pops and how long it'll take for markets to recover if and when it pops, it's an open question because history does not repeat itself.
Yeah. Let's take a quick break here. When we come back, we'll talk about how AI is not just influencing the stock market. I don't know why I put the emphasis on that syllable. We'll talk about why it's also influencing the bond market in ways that you might not expect.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Navigating Retirement Housing Choices. Mike, as you get towards retirement, what are some of the considerations for whether you should stay in the property that you've been in for a while or consider moving to a new one?
To me, for most people, they come down to 2 factors. One would be financial, and 2 would be quality of life. And so, first things first, right? I mean, you're heading to retirement. Did you do enough saving to be able to afford to live in the same place you did, with or without that mortgage, with where property taxes and insurance costs have been going? So that's probably number one. But the one that people kind of start to forget about is the quality of life. And so how close am I to family? How close am I to health care? And am I going to be safe in this house 20 years from now from a healthcare perspective?
It seems like for most people, they're going to have different priorities as far as which of those come first. So it very much is not, here's what you do, but more, here are the things you need to consider and then get to your own conclusion.
Yeah, but I think it's important that people think long-term on this, right? You do not want to make this decision twice. And so very often we do see that happen. Hey, I'm moving here because of taxes, and I didn't think about the other qualitative lifestyle pieces about that move.
Folks, our guide is titled Navigating Retirement Housing Choices. There are 2 ways to request it. First, you can call 800-393-4001. Second, you can go to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are beginning the week dipping into negative territory as traders ready for a flurry of retailer earnings, including Home Depot tomorrow morning, Lowe's and Target on Wednesday, followed by Walmart on Thursday. Right now, the Dow's down 0.33% or 171 points. S&P 500 down 0.1% or 10 points lower. NASDAQ is completely flat, could not be more flat. Russell 2000 is down about 0.33%. 10-year Treasury yield is not loading for me. Looks like it's flat at 4.69%, and oil is flat as well, trading at $82 a barrel. Shares in several domestic memory chip makers are seeing gains after U.S. Commerce Secretary Howard Lutnick told the Wall Street Journal the Trump administration opposes Apple buying Chinese memory chips. SanDisk jumping 8%, Western Digital up 7%, and Micron Technologies up by 4%. Meanwhile, according to Reuters, Alibaba is expected to unload its gaming developer unit to private equity firm TrueStar Capital for more than $2 billion. Alibaba stock is up about 0.5%, and NVIDIA has agreed to provide a more $100 billion for a massive new OpenAI data center in Ohio that is being developed alongside a SoftBank-led energy company in one of the biggest AI infrastructure deals yet. NVIDIA stock is up about 0.5% so far today. I'm Tucker Silva. That is Wall Street Watch.
Peace in Bloomberg. AI is driving up Treasury yields. Quote, it just touches everything. I'm calling bull-loney on this.
Yeah?
Yes.
Okay. Talk to me.
So, here's the deal. You've got a whole bunch of AI companies that are issuing a whole bunch of debt.
Okay.
Hyperscalers, they're issuing, $25 billion at a time in debt. And people are saying, like, okay, is this crowding out, because, money has to go and buy that debt, is this what's driving up Treasury yields? And my answer is no, it's not.
The government's borrowing is driving.
No, it's not. It's not the government's borrowing either. Like, everyone always wants to be like,
deficit
problem. I'm the smartest guy in the room. It's the deficit, man. And then when yields go down, it's like, oh, did the deficit go down? Well, no, but it's still the deficit, man. And it's like, well, it's not the deficit then. You can't just like have your cake and eat it too.
Yeah.
Here's the deal, Mike. Are there lots of data centers being built in Japan?
Not. Maybe, but not that I'm aware of.
The answer is no. It's prohibitively expensive and like
not a ton of real estate.
Well, and also like electricity is kind of a problem in Japan.
Yeah.
Like you just can't keep electrifying.
Yeah.
Like they
will not leave the lights on for you.
They kind of have a problem with nuclear power following Fukushima, and other than that, there's not really a great way to generate power in Japan because they don't have a ton of nat gas and everything, so they have to import it, and that's kind of been a problem this year. So no, there's not a whole lot of data center construction going on in Japan. Michael, have you seen what's been happening with Japanese long-term Treasury yields?
Yeah.
They've been going up, way up in the last 3 years, even before large-scale data center construction and financing was a thing. This is not a U.S. story, and so it's not a U.S. cause. I know we always have to be like the star of the show, and it's like, everything has to be about us. It's not. Bond yields are going up globally, and it's not because of AI issuing a bunch of AI companies issuing a bunch of debt. This has been happening even before 2026 when none of them were issuing any additional debt to build data centers. So I look at this in terms of, hey, is there any substantive change in what's been going on in yields this year versus, the last several years? And the answer is no. And so I get to, hey, if you want to prove to me that the AI-related debt is actually driving up borrowing costs, you're going to have to do more than just, well, Treasury yields have gone up in the last month and AI companies have issued debt. Well, okay, like, what about the couple months before? Like, what are we doing here?
So what do we have? Just a bond market globally that's worried about inflation and shortages?
Yeah, we have. It's not even that's worried about, what do you mean shortages?
Energy.
I don't even think it's that, because again, the sell-off in the bond market predates any of the Hormuz stuff.
Yeah.
Like, this is what I'm trying to get at is, ultimately, no one trusts any of these currencies as far as they can throw them. Like no one does. Like, you want to go and own the yen right now when you've had a Ministry of Finance and U.S. Treasury intervention, and the yen still is hovering around 160 because no one believes it? Like, you want to go and buy euros with that economy?
Seemingly not.
You want to go and buy, like, U.S. dollars with that deficit? Where are you going to go? Who are you going to call aside from Ghostbusters? And so, like, this is what's happening. It's a global currency sell-off that is going on. And if that's happening and you fear loss of purchasing power, you say, okay, I don't want to own those long-term bonds then, because they're going to do what every government always does when faced with the question of, like, how do we deal with, like, covering the cost of this? You screw the bondholders, not by defaulting in nominal terms, but you default in real terms by letting inflation run hotter, which is what we're seeing.
So it's an inflation problem. Roundabout, you might be able to convince me that AI is now a little bit contributing to the inflation problem and might for the next few years, but that's a lot different than saying because Google borrowed $25 billion, it's making it more expensive for the U.S. government to borrow. Like, sure, yeah, all else equal, if you said that, hey, the government was cutting its deficit in half and these companies weren't borrowing money, would interest rates maybe be lower? Yeah, probably, but that's kind of a false premise to start with.
Right. So, I don't know. Like, I look at this question and I don't know. I'm very much meh.
Here's the other side of this question, or the other side of this point that I just made, is all the people calling out AI as going to be productivity boosting in a way that makes inflation not concerning. Like our current Fed chair has alluded to this idea that, hey, AI is going to kind of fix our inflation problems. I think that is crazy.
Why?
So we may see the productivity boost, but right now, I think the only argument you can make about AI spending is that it is going to be inflationary for the time being.
The place that I have always struggled with it is, okay, if AI makes things that much more productive, ultimately that has to translate into real world
dollars.
Yeah. Like it's got to be like
money.
Like what is it going to make cheaper is the question.
Yeah.
Like in real terms, what's it going to make?
Well, it's
cheaper?
I mean, labor is seemingly the answer.
Okay, so good. So like we think labor is going to be cheaper. Then why do we expect people to be able to buy the same amount that they could before?
Right.
If the cost of labor goes down, meaning your wage goes down or aggregate wages go down, then you have the question of, okay, if there aren't as many people to buy the products because they don't have as much income, then does that accelerate?
What did AI get us?
Does that accelerate how fast you lay people off, and that like you end up in a spiral? And this is how you get the all the tech people saying, well, we need to have universal basic income then. So like I don't know what the answer is on this, but I do know that there's no free lunch. I've tried. I love lunch. I've looked for it, and it's not free.
And there's a lot of people promising a lot of free lunch right now.
There are, and so that's
Elon Musk keeps telling me that there's no need to save for retirement. I'm just not buying it.
Right, then why?
Right, he does.
Maybe there's no need for him to save for retirement since he had $1 trillion at one point this year. But for us mere mortals who don't have $1 trillion,
I'm still going to need to.
It's a question. So I don't know, but this is again the math. I always struggle to math with when we get into the weeds on this. Let's take a quick break. When we come back, we'll talk about what we are seeing in terms of wages versus inflation next.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Stuck in traffic again? Same road, same commute, same thought. How many more years am I doing this? 1, 2, 5? At the Armstrong Advisory Group, our financial advisors help people answer one of the biggest retirement questions. Could I be retired right now? Many factors may affect your decision, including what your income might look like and whether your retirement plan is built for the life you actually want. We can provide you with some strategies to help you see where you stand. So before you assume you have to keep working, get a clearer picture. Visit our website at armstrongadvisory.com and schedule a no-obligation meeting. The Armstrong Advisory Group. We answer only to you.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last-Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last-Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
In the last 10 days, we had a few different government data releases, one of which showed that consumer prices over the last year rose 3.4%. Another showing that over the last year, average hourly earnings rose 3.2%. This means that on average, Americans now are in a situation where for the last year, their spending or the prices that they pay have risen at a faster rate than their wages. Now, remember, there is no, one person who's the average American. You can't point to, Mike or Tucker or anyone else and be like, hey, that person is the average American financially, because they don't exist. Ultimately, during the last, if you have a situation, even let's say that on average, wages are keeping up with inflation, there's a big chunk of people for whom it's not. Mm-hmm. And there's a big chunk of people for whom wages are outpacing inflation. True. Which is why, again, over the last, couple of years, it's been perfectly valid for people to say, hey, my personal rate of inflation is higher than what's being documented, or my wage growth is lower, and so I'm feeling worse off. Totally buy that. But what you don't want to see is a bigger portion of workers that fall behind in that race. And that is what the data is indicating over the last year now.
Yeah, the big piece of the inflation piece that we tend to glaze over because it's really tough to measure is housing inflation. You think about the number of people who own their homes.
The medical one's impossible.
Yeah,
also.
The medical one is really complicated.
The BLS literally says we can't actually calculate this, so we do the best we can.
Yeah. With housing, what they're trying to do, if you own a home, they're trying to determine owner's equivalent rent. which is just a nonsense, way of
So what
measuring
does that
things. But
mean?
it's a way of doing it. But they try and figure out basically what it would cost to rent your home if you didn't own it, because otherwise they're just going to be looking at a fixed rate or mortgage. Or what happened, I think, during the 80s was inflation as measured took off because interest rates on mortgages went up. And it's like, well, that's not really all that accurate either. And so we came up to this new measurement. But to your point, a lot of different experiences. However, whether you're measuring it this way or there's another way of measuring, income versus inflation, personal income after taxes, which takes into account things like retirement benefits and rental income and things that, traditional income measures don't look at. That fell in inflation-adjusted terms for the second quarter as well. And so, overall, I think we can comfortably say that on average, wages and other forms of income are simply not keeping pace with these current rates of inflation.
One day you're living in your own home, the next you can't return home after rehab. Now you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major financial decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now at 866-848-5699 and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Piece in the Wall Street Journal, the hidden advantages of being a job hopper. So the subheader kind of gets at this. People who switch employers a lot are often seen as red flags. New evidence suggests they get up to speed much faster than others. So first, the first thing about this study that you have to know, it hits you like a ton of bricks. Quote, in a new study of 8,700 hedge fund managers. Okay, so first,
the everyday man.
So first of all, got to be honest, didn't know that there were 8,700 hedge fund managers to begin with.
Probably shouldn't be.
Feels like we got enough. Yeah. Like that, it seems like enough, all else being equal. Those who had switched jobs hit the ground running much faster than other new hires. The researchers say they could tell because they measured just how much money they made. Okay. So what we're talking about here is specifically, again, we're talking hedge fund managers, and specifically, are we talking about money they made for their fund or the money they made in their pocket?
Presumably the fund, because I don't think that they would be able to readily measure. Maybe they could measure wages too if they had enough disclosure, but probably for the fund would be my guess.
Because this piece, I'm reading through it, and it doesn't specify who the money was made for. Now, I'm just trying to think through methodological issues that could come up. Okay, is it possible that the hedge fund managers that switch a lot just happen to be more talented than other ones?
Yes.
They're in demand and so they get a new offer and they go somewhere else. Maybe.
Yeah.
Or maybe they're highly compensated enough where they are that that's not the case. But
so I'll be the first to admit, applications coming in on your resume, you have, a decade where you spent time at 6 different employers. I'm pretty predisposed against that candidate.
Well, I think you're at least going to ask, hey, what's the deal? If I'm hiring a candidate, and again, let's be if we're being honest about this, no one expects a candidate to stick around forever.
True. Or if you do, you're crazy.
But I think realistically, hey, you want to get 3 to 5 years out of an employee, and you consider that a baseline for success. Anything more than that's gravy, quite honestly.
Sure.
It's just kind of how it is.
So the point that they're making, I am with you that I don't buy the results of the study because, one, I don't know that hedge fund managers tell me much about a mechanic or a tech worker, a software designer. Like I don't know that they do. But I would, I guess, hypothetically buy that somebody who is switching jobs quite a bit may be better at adapting to your new firm's culture and learning the role faster than somebody that's worked for one company for 20 years.
Yes.
Like, I buy that in theory, but I would have to weigh that against, great, they got up and running in 3 months as opposed to 6.
And then left in
and
6.
then left 6 months later. Like, that's still not terribly valuable to me. Right? I would much rather take the employee that takes 6 months to get up to speed and stays for 5 years than the one that takes 3 months to get up to speed and leaves after 1 year. So I'm not sure the study really moves in the direction of this, Richard, but I think perhaps if you can be open-minded to finding that person and incentivizing them to actually stay in the role, then, that's something to be said for it. But for employees, I will say, hey, big benefit by jumping. Just beware of the reputational risk you do to yourself by hopping from place to place to place, because there's a lot of places that will just throw out that resume. I
think in general, as long as you've stayed at least 18 plus months somewhere.
Yeah, I don't see that as a problem then.
But
if you've got 3 jobs on your resume where you lasted less than a year, I would have some serious questions.
It's kind of like, okay, what's going on here?
Is it you?
No, it's all of them.
It's always.
Oh, okay, well, respect. Let's take a quick break here. We got hour 2 coming up in just a little bit.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing, to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about techniques that can help protect your assets from long-term care expenses last minute. Todd, what happens to your home when a spouse enters a nursing home and no planning has been done? And is it different for single individuals?
Yeah, so very good question, and the answer is yes, it is different. So let's talk about the spouse first. When you're married, if you have a spouse living in the home, regardless of the value of the home, as long as it's located in Massachusetts, it's non-countable. And it's non-lienable. So it's really, truly protected. Now, don't leave it that way. Make sure you put it 100% in the name of the healthy spouse after that happens. However, for a single individual, it's a little different. As long as the value doesn't exceed $1,071,000, there's a number that changes every year. It goes up. Then it would be countable if it's worth more than that. If it's worth less than that, and you check a box that you intend to return home, it's non-countable, but it's lienable. But so what? Getting on the Medicaid at the Medicaid rate is better than paying privately.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details last-minute Medicaid eligibility. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can simply request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here on Monday, and pretty quiet trading overall today so far. The S&P's down about 10 points, continuing very modest losses from Friday. The Dow's off 232. NASDAQ Composite, though, up 44 points. So, again, kind of just mixed markets, not much direction. Everyone's just kind of chilling right now. 10-year Treasury up 1.2 basis points to 4.708%. Despite that, you've got the dollar index off 0.15%, 99,405 there. And gold is up 35.10 an ounce to 44.72. Crude oil, West Texas Intermediate, is at 82.26. That's down 14 cents a barrel from last Friday. AAA National Average, not really budging a whole lot, as you would expect. It's down 0.2 of a cent to 406 3/10 right now, so no major movement there. And the one that I do want to keep pointing out, though, as long as we're talking fuel prices, diesel keeps on creeping up. We're now at $5.44 a gallon there. Gas prices have gone up 6 cents over the last week. Diesel prices up 15 cents over the last week. And this all gets at, hey, ultimately, different fuels are made from different kinds of crude. And diesel tends to require heavier, more sulfur, higher sulfur content crude in order to produce diesel. And that's the very stuff that tends to come out of the Middle East. And when we don't have as much of that, we really can't produce as much of it domestically. There are other places that you can get it, but not like you're just going to spool them up instantly. And so watch what goes on with diesel, because those prices have a chance to continue ticking up in the coming weeks and potentially could threaten the all-time high of $5.81 per gallon on diesel. Piece here in CNBC from Mike Santoli, who we occasionally have on the show. Earnings bonanza that lifted market to record may not be all that it appears to be. Oh, is it an earnings mirage, Michael?
That's more and more what people seem to be, interested in and fascinated by. Obviously, we are no longer at the all-time, the cycle high on valuations. That was reached back in October of last year when we got to 23 times forward earnings. It's since declined because the earnings have come in and are so good. So we made this point last week as well, and there's a few points, I guess, to be made on it. One, a lot of the earnings that you have seen for the last few quarters have been based on big companies who have big investment stakes in privately held companies who we think are now worth more than they previously were. So think about Alphabet's holdings in Anthropic. They are not insignificant, and they made the investment a while ago. If you are a publicly traded company, you need to show that increase in valuation on your P&L as something that actually happened when, reality, it's not like you sold more stuff or spent more money to sell that stuff. You just owned a company that became more valuable. Likewise, the other part of the earnings mirage that we have discussed is all the companies that are making on and off balance sheet investments into data centers. So an example here would be Meta is assisting in the build out of a massive data center in Louisiana, I believe it is. It's not actually being funded today by Meta. What they have done is they have agreed to a lease of the facility. They are backing up the builders of that facility and saying, hey, if they default, we will actually back the bond issuance that they are making. And if we leave as a tenant within the next 20 years, then we will also back the bond issuance there. But because they are not actually raising the money, nor are they spending the money on the lease right now, it's not really being booked as an expense. And so
Sure.
There's a few of these different types of arrangements that are today making earnings look perhaps better than they will in the future. But that's a perhaps. The question remains, Chuck, is clearly these companies see a investment that they believe is worth making. So the relevant question is, how much are they going to grow their revenue to account for this massive surge in expense? Right? I mean,
it's the whole ballgame. I mean, it's, again, here's the thing. Next year, you've got north of $1 trillion in CapEx commitments that in future years is going to come back in the form of about 100, and depending on the depreciation schedule, $140 to $180 billion a year in depreciation.
Because again, this capital expenditure means they're buying stuff that has a useful life.
Now, if one were to assume 40% margins, okay, then you're talking, in order to cover that, you need $500 billion in revenue generated by that CapEx in order to cover it going forward. You're going to get $500 billion in new revenue from this stuff? Maybe. And remember, that's just for 1 year of building. Then you got another one of those and another. So now you got, like, within a few years, you need another $1.5 trillion in revenue for all these hyperscalers. How are you going to get there? Like, where's it going to come? What companies in the world just have all this money floating around? They don't. And so this is how you get to, okay, they're going to have to cut headcount in order to do that. Well, what does that do to the economy? I don't know. But it's like the math gets awfully hard when you look at it. And that's the part I struggle with. The other stuff, hey, earnings, look, the reason why the U.S. stock market has been so fantastic for the last, 80 years, post-World War II period in particular, is because companies have been able to figure out, hey, how are we going to grow earnings year after year? They don't do it every year. There's always hiccups that come in and disrupt things. Like that happens. But in the long run, the reason why you have the S&P 500 producing the returns that it has is because the long-run rate of earnings growth for S&P 500 companies is around 7%. And so the question here is, look, the last 4 years now, you've had double-digit returns in markets. I'm including this one so far this year. Do we think that AI is going to be something that transforms the potential earnings growth from 7% up to like 12 to 15% year over year? Are you perpetually in that mode? If you are, then great. If not, then not so great. Like that's basically how it looks. In the short term, the counter to this, this piece, and again, like, we have Mike on. I'm not disagreeing with Mike Santoli here. I'm just saying, hey, here's the possible counter. Hey, if markets got to 23x forward earnings last year and we're only sitting here at 20 right now, then if you believe that 23 is the right multiple to slap on, on earnings here, okay, instead of 20, then what you're actually looking at is the market should be making a run towards almost 9,000 on the S&P 500, not 7,800. Is that reasonable? I don't know, but I just... It's always good to consider alternative viewpoints and understand how you can get there. The bear case right now is that this is just another tech bubble. The bull case is that it's not, and stocks are priced more cheaply than a year ago, and maybe last year was the right pricing. We'll see which one ends up developing from here, but keep an open mind on these things. Quick break. When we return, Let's talk a little bit about home improvement, the home improvement sector. We got a bunch of earnings coming there this week. We'll discuss next.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
Seeing some high volume out there on those roads today, folks. 93 northbound at exit.
Sound familiar?
The Braintree split is backed up.
If your commute feels endless, it might be time to ask a bigger question. Are you working because you want to or because you think you have to? At the Armstrong Advisory Group, our financial advisors help individuals and families build retirement income plans designed around their goals, savings, Social Security, investments, and overall financial picture. Retirement shouldn't be a guessing game. If you're concerned about what path you're on or have questions about your financial plan, we may be able to help. Visit ArmstrongAdvisory.com and schedule a no-obligation meeting. The Armstrong Advisory Group. We answer only to you. Schedule your meeting today at ArmstrongAdvisory.com. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A single nursing home stay could cost you more than $14,000 a month. That's why so many families believe they'll have to spend almost everything before a loved one can qualify for Medicaid. But that isn't always the case. Cushing & Dolan has created a new guide called Last Minute Medicaid Eligibility. In it, you'll learn how Medicaid eligibility works, get information about last-minute planning options that may still be available, the mistakes that could cost your family, and why acting quickly could give you more options. Don't assume you have to lose everything to pay for long-term care. Get your free copy of our new guide called Last Minute Medicaid Eligibility right now by calling 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
Subscribe now to our YouTube page where you'll find interviews, highlights, and full shows of the Financial Exchange. You'll get caught up on anything and everything you might have missed right here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
Big week here for home improvement earnings. We got Home Depot and Lowe's that are reporting. Floor & Decor reported a couple weeks ago. You ever been to a Floor & Decor?
I have.
Yes.
Yeah. I got to tell you, man. So I redid a laundry room a couple years ago.
Okay.
And in doing it, there'd previously been a sink in there, and we pulled it out expecting just the sink to be like, on top of the previous tile, and it turned out that the tile had been put around the sink because it went all the way down.
Yeah, sure.
And so it was okay. Like I got to tell you, after retiling a laundry room, I wanted to put tile everywhere, man. Like I love this stuff. Like it's just.
Did you yourself install it?
No.
Okay.
No, I didn't because it's. Here's the thing. I feel like I would be comfortable tiling walls.
Mm-hmm.
I don't think I'm comfortable tiling a floor.
Yeah.
Just because I don't think I would be able to do it even enough. I feel like if I did it on the floor, it wouldn't be quite level enough, whereas on the wall, it's like, oh, he meant to do that. Like, it's a texture or something, and it's like, you could forgive me for not being good at it.
Yeah.
But in any case, you got home improvement earnings that are coming this week, and there's this headline in the Wall Street Journal, Home Improvement's hangover could last. As if, like, the last 3 years haven't happened, where the housing sector's just been stuck in neutral at a very low level of activity since 2022. Like, you look at 23, 4, 5, and now 6. It's been 4 years of crap for the housing sector.
Yeah. To be frank, it would be more surprising if the home improvement sector had a big rebound this quarter than if the hangover didn't continue to contribute, right?
Yes.
Nobody's buying or selling homes. And we just talked about cash-strapped consumers who are seeing inflation outpace their wages. So I don't really see a great case for home improvement companies to surge in the coming quarters because, again, you can only buy so many inflatable Halloween decorations, which, by the way, are out if you haven't been to Home Depot and Lowe's yet. My dog was terrified.
I didn't see him at BJ's last weekend.
No? Okay.
No.
Maybe it's just the home improvement guys. But yeah, I mean, this will be a heavy earnings week for those, not just home improvement retailers, but retailers generally. So tomorrow morning, we do have Home Depot reporting, as you mentioned.
Yep.
Wednesday, we're going to have TJX, Lowe's, Target all reporting before the bell. And then Thursday, we're going to get earnings from Walmart. Deere's in there as well, big company, but not home improvement related. So, a few things to potentially get answers to, right? We've been hearing over and over again about inflation versus earnings, and yet you've got that lower fifth or that lower quarter of the household income demographic that seems to be having wages increase. So do we get any flavor of that in these earnings? I think will be interesting to me. The other one that I found more entertaining than interesting is Walmart and Target, who used to be pretty comparable stores, for the last 5 years have just seen Walmart just clean up compared to what Target's able to do. And I'm curious if there's any return to execution on that front. But that's more been an entertaining story than it has been a market-moving story in any meaningful way.
Yeah, the piece that's, I mean, here's the thing. I think we've always wanted to think that they're comparable, but they're not. Like, I was looking at the data before this, actually. Today, Walmart has $725 billion in revenue, and Target has about 106. So call it's like a 7-to-1 ratio. You go back to 2000, 25 years ago, Walmart had $165 billion in revenue. Target was 33. It was a 5-to-1. I don't know why it always seemed like they were closer in size, but like they never have been.
Can we just talk for a minute? I don't know about everyone else who's listening experience right now, and I recognize that Home Depot, Lowe's, Walmart, and Target do pretty different things, but you can get some of the same items at all four of those stores. And I gotta tell you, in my experience, Walmart is just so much better than the others at it. Recent couple examples. One, just ordering things online, and Home Depot's website
it's brutal,
just unusable.
It's brutal.
The shopping cart wouldn't properly adjust. Any of the filters when I was searching for a fridge, and like the filters just had no. You would put one filter in, and suddenly there would be 0 items that you could look at.
It just jumps on there now, and there's just like the first half of the website is just banners.
The other thing that I will say, so Walmart, you go and find the item that you want. And so I was traveling recently, and I wanted a meat thermometer while we were on vacation, and my wife's uncle was going to Walmart, and I said steaks. And I was doing it for 30 people, so I didn't want to screw it up.
You just want to touch them? You can't do it by feel?
I can, but
rare,
I did not. I
medium
know
rare.
I know the trick. Again,
I'm pointing
if
to
I
my
screwed
palm.
this up for 25 or 30 people, I would be criticized for life. So I wanted to make sure I got it. But go to Walmart.com. I say, this is the meat thermometer I want. And they put a nice little display. Like, this is the aisle in it. It's going to be at this height. And here's the thing that you're looking for.
Oh, that is
and I
nice.
send that to him, and it's there. And the inventory is correct. I do the same thing at Home Depot. They tell me that there's 200 in stock. You get there, and there's 5 open bags of gravel that have all fallen apart in spite of them telling me that there's 500 in stock. It's just, again, different types of products. I recognize that they are not the same companies, but they all fall into the same category of big local presence. In my opinion, generally understaffed for what you're looking for. Pretty tough to find an employee in all these locations, but one of them really outshines the others in terms of their ability to control their inventory, monitor it, and quickly tell you what they have in stock. And then if you want to just buy it online, just a way better experience in my opinion.
I'm in strong agreement. Walmart in the last decade has made huge progress in 3 things, in my opinion. Number one, as you mentioned, the online experience is just way better than it used to be. They've done a tremendous job building that out. Number 2, the overall vibe in the stores is miles better than it used to be. It just feels higher quality than you remember a Walmart from 25 years ago.
Yeah.
And the other one that I'll say, and this I think is happening across the board, and look, people forget that Walmart is the biggest grocery store in the country.
Yep.
They have the greatest dollar volume of grocery sales out of any company in the country. The quality of what you can get at Walmart's grocery stores and the selection is so much better than it used to be.
Yeah, you might even be able to get shallots these days.
It's absolutely wild.
You guys got any shallots?
You're never going to let them live that down, are you?
What?
No, that was a me thing, not a them
It
thing.
was 5-6 years ago.
One should not go to the Noblesville, Indiana Walmart grocery store and expect them to have shallots and then the staff to know where they are. It's an unrealistic expectation in my view.
That's fair.
Yeah.
That's fair. So, yeah, I think they've done a tremendous job building all of those kind of pillars of what they are today now. And, yeah, it's the home improvement stores, I feel like, again, I don't go into them a ton. Quite honestly, there's a small Ace Hardware near me that I tend to use for most things just because I prefer, it's just closer to me than any of the big boys. And so, I just end up there. But the big guys, I feel like they're great if you know exactly what you need.
Yeah, look, they're good because a big chunk of their sales goes to contractors who know what they're doing.
Not
I
us.
don't.
Not us.
So I go to Walmart.
Yes.
Where are your shallots? Mike asked at Lowe's.
Right? Says right here you have them in stock, 30.
Yeah, those are that's the store next door, Michael. Let's take a quick break. When we return, we got Wall Street Watch, and then we'll talk about TikTok financial advice.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
The biggest retirement decision you make may have nothing to do with your investments. This is Mike Armstrong from the Armstrong Advisory Group. You've worked hard preparing your finances for retirement, so take the time to think about whether your home will still fit the life you want to live. The house that's perfect today could become more work than it's worth a few years from now. Stairs, maintenance, a big yard, or even being too far from the people and places that matter. Our new guide, Navigating Retirement Housing Choices, walks through the different stages of retirement, the housing options available, and the questions you should be asking now before a decision becomes urgent. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699, or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled Navigating Retirement Housing Choices. Mike, when we look at the considerations for people in their housing and retirement, one that comes up are these continuing care retirement communities, CCRCs, or age-in-place communities as they're known. How does someone make a decision about looking at one of those?
Well, I think the first, obviously you have to sort out your priorities, but the first thing is to think long-term about this. And what people sometimes overlook with these places is that term continuing care means that they adapt to your needs over time, but they do not just allow anyone in. In a lot of cases, they will have cognitive and physical tests that you need to pass in order to be accepted into these communities that then will provide all sorts of care later in life. And so I think early on is always better if you're considering that sort of thing.
The financial aspect of these also has a number of considerations as well in terms of what's actually affordable given your particular budget and liquidity.
Do I need a buy-in? Am I going to rent a place? What are my options for later in life? And then all sorts of tax considerations. Hey, I really want an income tax-free state. Well, is that worth it if I'm going to be paying more in property taxes given the composition of my assets and income? All of these really important considerations.
The guide this month is titled Navigating Retirement Housing Choices, and you've got a couple different ways to request it. First, you can call 800-393-4001. The second choice, you can go to armstrongadvisory.com and request it there. Again, that website is armstrongadvisory.com, or you can get it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. powerful Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today. Right here on the Financial Exchange Radio Network.
Markets mixed by midday to begin the week as traders ready for a batch of retailer earnings, including Home Depot tomorrow, Lowe's and Target on Wednesday, and Walmart on Thursday. Right now, the Dow is down about 1/3% or 190 points lower. S&P 500 down over 1/10% or 12 points lower. NASDAQ now edging higher about 1/10% or 27 points higher. Russell 2000 down 0.4%, and the 10-year Treasury yield is up 1 basis point at 4.706%. Oil up about 0.5%, trading at $82 a barrel. Shares in several domestic memory chip makers seeing gains after U.S. Commerce Secretary Howard Lutnick told the Wall Street Journal the Trump administration opposes Apple buying Chinese memory chips. SanDisk's jumping now 10%. Western Digital is up nearly 7%, and Micron Technology shares are up 6%. Meanwhile, according to Reuters, Alibaba is expected to unload its gaming developer unit to private equity firm TrueStar Capital for more than $2 billion. Alibaba stock is edging higher. And NVIDIA has agreed to provide more than $100 billion for a massive new OpenAI data center in Ohio that is being developed alongside SoftBank-led energy company in one of the biggest AI infrastructure deals yet. NVIDIA stock is up by 1%. I'm Tucker Silva, and that is Wall Street Watch.
Mike, do you spend much time on TikTok?
I actually don't have a TikTok account.
I don't either. Piece here in the Wall Street Journal, a breakdown of the financial advice that's flying all over TikTok. So the Wall Street Journal reviewed nearly 50 hours of TikTok content across 212 accounts offering money advice. So that might not sound like a lot of hours, but you have to remember the average TikTok video is like 30 seconds in length.
True.
So each hour you might have like 100 videos that you're reviewing. So you might have, overall looked at like 50,000 or 5,000, different videos and, tried to make heads or tails of what's actually going on in there. And basically what the Wall Street Journal found out is, surprise, surprise, like most of the people that are running those accounts don't have any kind of financial license or certification. It doesn't inherently mean that the information they're giving is bad. There are plenty of people out there that aren't certified to give advice who still, have
good ideas,
constructive thoughts about different financial topics. What did they find when they went through this, Mike?
Well, they kind of bucketed them into a few different categories. One was a group who were, really actually seemingly genuinely focused on educating, and some of them were quite qualified to do so. One of them was a former financial professional and is now doing this full time. 50 million different followers, or different likes across his videos, and they reviewed it, and it was pretty entertaining but plain vanilla stuff.
Sure. Hey,
index funds, Roth IRAs.
You got to save more than you spend, things like that.
So there is a lot of that. Remember how TikTok works, though. You're not getting a random sample, right? Like they did a random sample, but that's not what you're going to get. You're going to get fed information based on your previous viewing habits. And so that's really important context here. They put in another group that they labeled the young guns. These are generally people under the age of 25 who seem to have a lot of financial advice for you. Some they considered to be hot garbage. Others were fine.
Like standard things like, hey, if you have a credit card, make sure you pay it off every month. Like, again, nothing crazy necessarily.
The third category I found most interesting, just based on what we do, and they called them the stock hypers. So of the 212 accounts they reviewed, nearly a third were making recommendations about individual stocks or talked about their portfolio holdings. And by the way, one of the common ways that they do such things is they flash a view of their portfolio at the beginning of the video so that you can see just how much money they've made or how wealthy they are, which is, again, could be a full-out lie. You have no way of verifying any of those details, but they find that it's a way of getting people to trust them.
Sure.
The thing that I found interesting here, again, so if you are making a TikTok video and you are putting it out there and it's successful, if it's successful enough, you're getting compensated by TikTok. Right? Like if you monetize your videos, then they are placing ads in there, and therefore TikTok is then paying you, the creator of that video.
Yes.
I want to compare that to a sector in the financial industry, which is those who recommend stock picks via a newsletter.
Sure.
So it's not necessarily personalized investment advice. It is, hey, you're going to subscribe and pay for my newsletter, and in exchange, I'm going to give you stock picks. And in order to do that, you are required to register with the Securities Exchange Commission as an investment advisor because you are providing investment advice for a fee.
Sure.
In this case, you have, unlicensed individual providing stock picks to the general public, and they are being compensated for it because TikTok, again, it's not based on the success of their picks. It's based on the popularity of their videos, but TikTok is compensating in those individuals for this work. And frankly, just because regulations haven't really caught up, there's no registration requirement here. I just find that fascinating because it's another area where you are seeing technology move much faster than regulation. And quite honestly, financial advice on TikTok is Wild West. You're going to get some probably pretty sound stuff out there. You're also going to get some
hot garbage
that could be a scam too.
And everything in between.
The most fascinating piece about all that too, FINRA did a study looking at those who use social media for investment advice and rate and those who do it, like those who use social media for investment advice, rate their investment knowledge higher than those who don't. So when judging themselves, they say,
sure,
I have this type of knowledge. But when they actually put that knowledge to a test, they perform worse than the other group.
That's not great.
So again, it's this effect where, to me, that's pretty solid evidence that the advice that people are getting on TikTok makes them more confident and not more knowledgeable, which is kind of a dangerous combination if you think of it. Nonetheless, like we said, I'm open-minded to how people learn about financial guidance and get better at what it is that they do. However, I think you have to take any advice that you're going to get with a grain of salt.
Sure.
And, I think it's pretty important, especially if you are considering putting your own money at risk, that you understand the credentials of the person that you are listening to. And again, one of the benefits of working with somebody who, actually, has credentialed and registers with a regulator is a key thing there is disclosing their own conflicts of interest, right? Like, hey,
sure,
you get to know if I have a big conflict with recommending this, that, or the other to you. Nonetheless, like we said, there are a million different ways out there to build your own future financial plan and get quality investment advice. If you have been doing it on your own and looking for that extra help somewhere, Armstrong Advisory Group would like to chat with you and see if there is work that we could help you do around your investments, your personal finances, your retirement plan. If you would like more information for a free consultation, the number is 800-393-4001. We have offices in person scattered throughout New England. We conduct meetings via Zoom, over the phone, but get the ball rolling. Call us first, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette right after this.
From markets to money to business and financial news, watch The Financial Exchange every day on YouTube. Hit that subscribe button and keep up to date on the market news you need to know. This is The Financial Exchange. One day, you're living in your own home. The next, you can't return home after rehab. Now, you're faced with a nursing home bill of more than $14,000 a month and wondering how you're going to pay for it. These situations can occur without warning, but Cushing & Dolan can help. Before you make any major decisions, get the facts. Cushing & Dolan's new guide, Last Minute Medicaid Eligibility, explains common misconceptions about Medicaid, what assets may or may not be at risk, and why the first answer you receive isn't always your only option. Call right now, 866-848-5699, and get your free copy of Last Minute Medicaid Eligibility. That's 866-848-5699. Or you can request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement isn't just one stage of life. It changes over time, and your home should change with it. This is Mike Armstrong from the Armstrong Advisory Group. You may have heard of the go-go years when you're traveling and enjoying the freedom you've worked so hard to earn. Then come the slow-go years when convenience starts to matter more, and eventually the no-go years when safety and support take center stage. Our new guide, Navigating Retirement Housing Choices, shows you how different housing options can fit each stage of retirement. From staying in your home to downsizing to exploring elder life communities, you'll learn what questions to ask before you're forced to make a decision. Get your free copy today by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women.
Taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Mike, what do you got for me for Stack Roulette?
The New York Times reports that with AI riches at stake, pressure is mounting to share the wealth. So this is growing phenomenon that we're seeing across the political spectrum, by the way. This is not a uniquely Bernie Sanders idea, though he has tossed it out there. He's being agreed with on it by a number of conservative lawmakers as well, that, hey, with the amount of wealth that we are seeing created or expect to be created by AI and the potential for job loss, the appropriate way to deal with that is to have the government redistribute some of the wealth created by AI in the form of presumably ownership stakes. And I have to get out here and say it because, again, I keep hearing it repeated by people that seem to have a conservative values financial outlook or economic outlook. This is called socialism.
Yes.
Like, people are just throwing around the word communism and socialism all over the place recently, and they seem to be vastly afraid of it. But then topics like this come up like, oh, that actually does sound pretty good. Like, no, that's called socialism.
Mike, it's not just policymakers, and it's not just on this.
Yeah.
CBS News did a poll from August 12th to 14th. One of the questions asked was, would you approve or disapprove of government price controls? What do you think the percentage is of Democrats that said they approve of government price controls?
70?
75.
Wow.
What do you think it was for independents?
40?
62.
Jeez.
What do you think it was for Republicans?
60?
54.
Oh.
A majority across the two political parties and independents
are in favor
of government price controls.
Wow.
Which, again, the follow-up question should be, I am clearing my throat just so I want to make sure everyone hears this. The follow-up question is, if you believe in government price controls, then what is the right price for gasoline? Everywhere. Today.
We're going to get a bunch of texts.
Text us at 617-362-1385. Tell me the right price for any product. Because it doesn't exist. And then when you get to this piece about, we want the government to own this company, here's the problem that you get into then. Mike, you familiar with a company by the name of, let's see, you familiar with digital equipment?
Yeah.
Digital equipment still around today?
No.
Why are they not still around?
They got innovated out of business.
Correct. Now imagine that the federal government owns digital equipment.
Yep.
Are you going to go up against them?
Nope.
No, you're not. You're not even going to try to play that game because the federal government's going to say, no, we own digital, and if you try to compete against us, we're going to make it increasingly difficult to do so.
Yeah.
There are certain very niche areas that are inherently important for national security, but uneconomical to operate domestically, where you can make a case for sporadic government intervention. Places like, rare earth minerals and things like that, where
a healthy U.S. drone defense industry, all on board.
You can come up with some of these different things, but even in most of them, the answer isn't usually, well, I want the U.S. government to own these companies. It's usually, okay, the U.S. government should help find ways to incentivize the domestic production of these through private enterprise.
Yeah.
And ideally, not all through one national champion company that gets all of the funding, but rather, hey, here's 30 different moonshots out there. You guys go fight amongst yourselves.
I just, we get focused on this idea, hey, it's socialism because they want to raise my taxes and people are talking about expanding Social Security benefits or this, that, or the other. And I agree, that is, part of what an expanding government likes to do. Universal basic income is one of these ideas of, hey, this is how we're going to solve the crisis from AI. And we label that socialism. And then when we talk about the U.S. government taking equity ownership stakes in privately held companies to, quote, share the wealth of the AI trade.
Or setting prices.
We're like, oh, yeah, that sounds pretty good.
No.
This doesn't, again, not the only, but one of the reasons that I believe the U.S. economy has become the best in the world over the last couple hundred years is because we do allow businesses to succeed and fail, albeit with, a changing regulatory environment over time and changing tax codes and all these things. But the idea of allowing things to fail and crash and burn and then learn from that is a pretty, key component of that. And if the government's going to suddenly own all of the growth companies or have an ownership stake in them, it really removes that possibility.
Well, and also it becomes increasingly hard to try to figure out what is next if the government is setting that policy for what is next.
Yeah. So again, your lawmaker raising your taxes is not socialism. The government buying privately held companies in order to, quote, participate in the AI boom, that's socialism.
Yeah. Yeah.
It's kind of the bad kind.
It's not great where it's not great we're having these conversations more often.
Yeah, and that again, I don't mean to not focus on the poll that you just mentioned, that ABC poll, that more than half of the people polled in every political affiliation believe that price controls are a good idea is a pretty scary indicator of where people feel right.
Tucker, do we have anyone texting in telling us the right price for anything?
Somebody said $3.81.
Good call.
Is that what it is?
Yep.
I'm more of a 382 guy myself, but your mileage may vary.
Yeah.
That's the only one we got?
Somebody else said the socialists will say the right price is zero, free.
Yeah. There's just not enough of it.
Also adds, I miss digital.
Yeah. Well, I mean, you still got analog devices at least. They're still cooking around. Speaking of cooking, Burger King. They're cooking. I'm going to have to get back to Burger King. I stopped at a McDonald's on my way home yesterday. Got the kids a couple Happy Meals. Got a McNuggets myself. But it was because I was driving. I really would like to try out. They've revamped the Whopper, apparently.
Okay.
And it's one of the things that is driving this huge resurgence in Burger King sales. Same-store sales growth up 8.5% year over year.
Yeah, demolishing McDonald's and Wendy's.
Whereas McDonald's and Wendy's are basically flat. And look, I got to be honest, it's been probably 20 years since I've been to a Burger King. It's been a while.
Yeah.
I'm really a McDonald's, Wendy's guys if I'm going, pure fast food burgers. But they're getting a lot of buzz here. They apparently have a new bun that they've, gone a little bit more upscale with.
The last time I even thought about Burger King was in, I want to say mid-2000s when they had the creepy Burger King commercials. I don't remember the theme of them, but I just remember a bunch of people
with
dressing.
The king just like showing up in random places.
Dressing him as him for Halloween. I remember seeing several kings.
So I'm interested to see what's going on here, but they're doing something right. Them and is it Chili's that has like the 30% same store sales growth?
Yeah.
Chili's, we know what they're doing. They're selling really cheap burgers for the fast casual space.
Yeah.
Burger King, it's a combination of deals and revamped products. I got to check out the fries because that's always been the piece that's been lacking to me at Burger King is what's going on with the fries. I'll do a little bit of market research and report back.
And with that, it is lunchtime, folks.
Have a great rest of the day. We'll see you tomorrow.